Let's just talk about ITC for a quick bit. Let's get Pankaj in and let's look at ITC. So the stock sold off big time yesterday, and it's recovering a little bit, about 0.6% or so. That's about a 2 rupee move. Let's just look at the data from yesterday and see the picture. I mean, the overall picture on this one. 315 plus is where ITC is. Okay, let's look at the data. And we're looking at a couple of things. One is the volumes which are traded on ITC, which were traded yesterday against the average. We're looking at the delivery volumes, and we're looking at the open interest change as well yesterday. The table, essentially, is what I'm referring to. Okay, what do we have? Okay, the stock is up about 0.6% or so. 315.5 or odd is where ITC is at this point in time. 18 odd points on the Nifty. By the way, this is a Nifty heavyweight, and this is still early, about just first 20 minutes of trade or so right now. So there you go. Volumes yesterday were up about 4 times the 10-day average. Delivery volumes were up 2.5 odd times the 10-day average. And the futures open interest was up about 5.5 odd% or so. Let's have Pankaj here quickly. Let's take a look at some of the other fundamental factors as well, and see what's happening there on ITC. If ITC starts to swing even 3%, 4% with the rest of the Nifty 50 stocks doing nothing, I think you'll have a fair bit of move. I think yesterday's large sell-off from the day's high was, I mean, you could put the ITC intraday yesterday and the Nifty, and it would seem, and it would gel almost tick by tick. ITC cracked, the market also started to sell off. Pankaj, you've been speaking with analysts. First of all, let's start with valuations. What does it factor in?
So Prashant, now after yesterday's cut, people have not cut down their earnings estimates, and that's why the valuations from 24 times average 1 year forward has become to 21 times. Of course, there is a big event. I was trying to find out that at 310, 315, which is the price of ITC, what essentially is factored in, or what essentially the street is trying to factor in. But there are a lot of other events. That's the feedback that I got. And at this point of time, it's very difficult to say where will the bottom be. Will it be 310? Will it be 300? Will it be 290? It will all depend on the wording of the entire policy and how it essentially goes forward, and how different states react to it in terms of any policies that they make. So right now, there is a lot of uncertainty, and it's only falling because of sentiment impact. Of course, if what is feared is true, which means the 40% GST is applicable over and above the excise, then it can fall down to a fair valuation of 280 as per some of the analysts. Currently, it's trading at a 40% discount. Last 2 years, it has been trading at a 25 to 30% discount to the entire sector. So that valuation has slightly widened. As far as what clarity is needed, just wanted to revisit that ITC pays 2 kinds of taxes. One is excise and one is VAT. VAT is about 24% and excise is about 40%. GST for demerit tax, in which tobacco is included, has proposed a 40% rate. Now, this 40% rate is most likely, as per market assumption, over and above the excise, which means the implied 65% will become 80%. But again, we need clarity on this. I think there is a discussion lined up on GST today. Details are yet to be awaited from what CEA has recommended, the detailed big note, and I think only that should give us clarity on that front. As of now, markets confused, a lot of events lined up, and wording of how tobacco is going to be treated is something which is which essentially will be the next trigger for ITC.
Okay, I just want to, okay, that's ITC. The other one is metal stocks, and especially steel stocks, Tata Steel, SAIL and JSW Steel. If you go through some newspapers today, I don't know if stocks are reacting, I don't think so yet. But there are reports which suggest that the government is now looking to notify minimum import prices for a range of steel products. Minimum import price, below which you can't import, say for example, hot rolled coil steel, etc., into the country. Steel prices have corrected almost 26 odd percent. That is, domestic steel prices have corrected 26 odd percent over the last 18 months or so. The government, remember, recently imposed safeguard duties. But I think if you impose a floor beyond which you can't sell domestic import steel prices into the country, I think that should be a meaningful booster. I don't know if it is workable, if it is possible, and we'll try and get you reactions on this. But the fact of the matter is that the landed cost of Chinese HR steel that is hot rolled coil, is 450. The domestic price is $15 higher than that. That's about 465 or so. So there is still a difference of about $15 odd or so. So if you impose this, I think it will be certainly relief. Workable, not workable, but this is what reports are indicating at this point in time. So that's, I think, one more sector that you might as well watch out for. Pankaj, you want to add something?
Prashant, Goldman had written a piece on this 4 or 5 days back saying that once the safeguard duty was imposed of about 20% on HRC, nor the volumes have seen any major pickup. In fact, the price globally have corrected by about 6 to 7%. And that's why probably imports got cheaper, but prices here never fell and prices here never increased also because of the safeguard duty. In fact, they have corrected by about 3 to 4%. And that's why imports became cheaper. So despite the duty, it was still viable for those imports, even if you are not doing any meaningful size on that. So I think to arrest that, this sort of thing can be done, that the minimum import price is this, and only at this price would you be allowed to import, or you'll have to pay duty based on these prices.